There are 7 words that millions of Americans over 65 never think to say. 7 words that can mean the difference between paying thousands of dollars every year or keeping that money where it belongs. Those words are simple. I'm over 65. What am I exempt from? Most people assume that if they qualify for a discount, a tax break, or a government benefit, someone will eventually let them know. That isn't how the system works. Your bank isn't required to review every account for senior discounts. Your county tax office doesn't automatically enroll every eligible homeowner. Your Medicare plan isn't going to call and explain every program that could lower your costs. And your utility company has very little incentive to remind you that you may qualify for a lower rate. Every one of those organizations already knows these programs exist. Most of them know exactly who is likely to qualify. But in many cases, nothing happens until you ask. That's why I'm making this report. Because asking one simple question can unlock benefits that many retirees spend years paying for without realizing they never had to. I learned that lesson through someone very close to my family. My father-in-law spent 8 consecutive years paying property taxes that were significantly higher than they should have been. He qualified for his county's senior homestead exemption from the very first year he became eligible. No one told him. Every year the county mailed another assessment. Every year he paid it. Not once did anyone include a notice saying, "You may qualify for a reduction." He discovered the exemption only 2 months before he passed away. Not because a government office contacted him. Not because a financial advisor reviewed his records. A neighbor mentioned it during a casual conversation after church. By then, thousands of dollars had already been paid that the law never required him to pay. I don't want that happening to you. So let's begin with the expense affecting more retirees than almost anything else on this list. Property taxes. If you're over 65 and own the home you live in, there's a very good chance your state offers some form of property tax relief. It may be called a senior exemption, a homestead exemption, an assessment freeze, or a circuit breaker program. The name changes from state to state, the principle doesn't. Almost every state has created a legal way for older homeowners to reduce, or at least limit, their annual property tax burden. Yet millions of eligible seniors never claim these programs, not because they're difficult, not because they're hidden, simply because nobody ever told them to ask. For homeowners who do apply, the savings can be substantial. Many save between $1,200 and $4,800 every year. In states with particularly high property taxes, Illinois, New Jersey, New York, and Connecticut, the savings are often much larger. In some Illinois counties, qualifying homeowners reduce their annual property tax bill by as much as $7,000. Think about that for a moment. A 2-page application, a few supporting documents, and thousands of dollars staying in your retirement budget instead of leaving it. Here's what surprises most people. These benefits are almost never automatic. In most counties, you'll need to submit a short application, verify your age, confirm that the property is your primary residence, and in some cases, provide a copy of your most recent tax return. That's usually the entire process. Yet millions of seniors never complete it. County offices already know which homeowners are over 65. They know which properties are owner-occupied, but very few counties proactively contact homeowners who appear eligible. Instead, annual tax bills continue arriving exactly as before. If you've never checked your eligibility, do it this week. Visit your county assessor's or auditor's website. Search for Senior Exemption, Homestead Exemption, or Senior Freeze. Download the application and see whether you qualify. In many states, you may even be able to recover 2 or 3 years of overpaid property taxes by filing a retroactive claim. Now let's move to another program that quietly saves eligible retirees thousands of dollars each year. The Medicare Savings Program. Most people assume they earn too much to qualify. In reality, many don't realize the program calculates countable income, not simply the income shown on a tax return. Depending on your circumstances, certain income sources, including some Social Security adjustments and, in many states, certain veterans' benefits, may not count toward eligibility. That means people who believe they're above the limit sometimes qualify without realizing it. If you've never checked, you're making an assumption that could be costing you money every single month. Let's take a closer look at the Medicare Savings Program, because this is where thousands of retirees unknowingly leave money on the table every single year. One of the biggest misconceptions is that these programs are only for people living in poverty. That's simply not true. Eligibility isn't based solely on the number you see on your tax return. Instead, Medicare savings programs use what's called countable income, and that calculation often excludes certain income sources depending on your state. Here's an example. Imagine a retiree receiving approximately $18,000 a year. After applying the Medicaid income rules, their countable income may fall much lower than expected, sometimes low enough to qualify for the Qualified Medicare Beneficiary Program, commonly known as QMB. If they qualify, Medicare Part B premiums may be covered entirely. For many retirees, that's a savings of more than $2,000 every year. Now here's the part that should concern you. National estimates suggest that fewer than 4 out of every 10 eligible seniors are actually enrolled in these programs. That means the majority of people who legally qualify never receive the benefit, not because they were denied, not because they earned too much, because they never applied. No government agency automatically enrolls you. The Social Security Administration doesn't compare your income and send you an approval letter. State Medicaid offices generally don't contact Medicare beneficiaries to tell them they're eligible. The responsibility falls entirely on you, and unless you know the program exists, you'll never think to ask. Fortunately, checking your eligibility is surprisingly easy. Every state has a state health insurance assistance program, commonly known as SHIP. These counselors don't sell insurance. They don't earn commissions. Their job is to help Medicare beneficiaries understand the programs available to them. A typical eligibility review takes less than 20 minutes. It costs absolutely nothing. And for the right person, it could reduce healthcare expenses for years to come. Now let's move to another change that has already saved millions of Americans money, but many retirees still don't fully understand how it works. The $2,000 annual cap on Medicare Part D prescription drug costs. Beginning in 2025, the Inflation Reduction Act introduced a nationwide limit on annual out-of-pocket costs for covered Medicare Part D medications. Today, that protection is fully in effect. Here's what it means. Once your total eligible spending, including deductibles and co-payments, reaches $2,000 during the calendar year, your cost for covered prescription medications should effectively stop for the remainder of that year. That's a tremendous benefit for retirees managing expensive medications. Unfortunately, there's one problem. The billing systems that connect pharmacies, insurance companies, and prescription drug plans don't always update instantly. Sometimes information is delayed, sometimes records don't synchronize correctly, and in some cases, retirees continue paying co-payments they no longer legally owe. There's another issue that's even more common. Many seniors approach the $2,000 limit without realizing it. Imagine it's October or November. You're deciding whether to refill an expensive prescription now or wait until January because of the cost. What you don't realize is that you're only $50 or $100 away from reaching your annual limit. Had you known that, filling every necessary prescription before December 31st could have saved hundreds or even thousands of dollars. The solution is remarkably simple. Every fall, preferably in September or October, call your Medicare Part D plan and ask one question. What is my current out-of-pocket total toward this year's annual prescription drug limit? That's it. One question. If you're approaching the limit, talk with your physician and pharmacist about filling any medications you'll need before the end of the year. If you've already exceeded the limit but are still being charged co-payments, ask your plan to review your account immediately. You may be entitled to a refund. Don't assume someone will notify you. Most plans won't. The responsibility to monitor your progress still belongs to you. Now let's shift to another area where retirees quietly overpay every year: state income taxes. Many Americans are surprised to learn that most states don't tax Social Security benefits at all. Even in states that do impose some tax, generous deductions, exclusions, and income limits often reduce or completely eliminate the amount many retirees actually owe. The problem is that these tax breaks usually aren't applied automatically. They have to be claimed correctly when you file your state return. And if the person preparing your taxes isn't familiar with your state's retirement exclusions, those savings can easily be overlooked. States such as Georgia, Kentucky, and Mississippi offer significant tax advantages for retirement income. But those benefits only help the people who know they exist. If you've been using the same tax software, or even the same preparer, for years, it may be worth asking one simple question before filing your next return. Am I claiming every retirement income exclusion available in my state? That single conversation could uncover savings you've been missing for years. So far, we've talked about property taxes, Medicare savings programs, and prescription drug costs. Now let's move to another expense that quietly drains retirement income every single month: your utility bills. Most retirees assume the amount printed on their monthly statement is simply the rate everyone pays. In many cases, it isn't. Across the country, utility companies operate senior discount programs, low-income rate plans, and energy assistance programs that can significantly reduce the cost of heating, cooling, electricity, and even natural gas. The problem is that very few customers ever hear about them. One of the best-known programs is LIHEAP, the Low-Income Home Energy Assistance Program. It's funded by the federal government and helps qualifying households pay heating and cooling costs. But that's only part of the picture. Many electric and gas companies offer their own senior discount programs, separate from LIHEAP, under rules approved by state utility commissions. These programs often have income limits that are higher than people expect. As a result, many middle-income retirees qualify without realizing it. Depending on where you live, the savings can range from $400 to well over $1,500 every year. And unlike a one-time rebate, these discounts continue year after year as long as you remain eligible. The frustrating part? Most utility companies don't advertise these programs on your monthly bill. They don't highlight them in rate increase notices, and they rarely contact customers who may qualify. Instead, the responsibility falls on you. Fortunately, finding out takes only a few minutes. Call your electric or gas company and ask one simple question. Do you offer any senior discounts or income-based rate programs that I may qualify for? That single phone call could permanently lower one of the largest recurring expenses in your retirement budget. Now let's turn to another category that many people overlook completely: bank fees. Think about how long you've been with your bank. 10 years, 20, maybe even 30. Loyal customers often assume they're already receiving the best account available. Ironically, they're often paying more than new customers. Many major banks, including Chase, Bank of America, Wells Fargo, U.S. Bank, and others, offer checking accounts designed specifically for older adults. These accounts frequently eliminate monthly maintenance fees, reduce service charges, or provide additional benefits once customers reach age 62 or 65. Yet customers are rarely moved into those accounts automatically. Instead, they continue paying maintenance fees month after month simply because no one suggested making the switch. If you've been paying $10 or $15 every month for a checking account you've had for decades, those charges add up quickly. Over 10 years, that could mean well over $1,000 spent on fees that may have been completely avoidable. The solution couldn't be easier. Call your bank. Ask for a senior account review. Find out whether a different account type would eliminate your monthly maintenance fee. The same strategy applies to credit cards. Many retirees carry the same credit card they've used for years. Some of those cards charge annual fees ranging from $95 to several $100s. Most people simply pay the fee every year without questioning it. What many cardholders don't realize is that banks often have dedicated retention departments with the authority to reduce or even eliminate those fees for long-term customers. Here's a simple approach. Call the number on the back of your credit card. Tell the representative you've been a loyal customer for several years and you're considering closing the account because of the annual fee. Then ask one question. Is there anything you can do to reduce or waive this fee? Sometimes they'll offer a statement credit. Sometimes they'll waive the annual fee entirely. Other times they'll move you to a no-fee version of the same card while allowing you to keep your account history intact. You lose nothing by asking. and you could save hundreds of dollars. Now let's talk about another service that many retirees continue paying for, even though free alternatives are often available. Notary services, powers of attorney, healthcare directives, estate planning documents, real estate paperwork. These are exactly the types of documents retirees are most likely to notarize. Private notaries often charge anywhere from $5 to $25 per signature, and a single estate planning appointment can easily cost over $100 in notary fees alone. What many people don't realize is that their own bank may already provide the same service at no charge. Many banks offer free notary services to account holders. County offices frequently notarize documents related to public records. Many public libraries provide free notary appointments. Some senior centers offer scheduled notary days. In other words, before paying a private notary, make one phone call. Ask your bank, do you provide complimentary notary services for account holders? That single question may save you money every time you need an important document notarized. By now, you've probably noticed a pattern, whether we're talking about property taxes, healthcare, prescription drugs, utility bills, bank accounts, credit cards, or notary services. The system works the same way. The benefit usually exists. The paperwork usually isn't complicated, but nothing happens until you ask. And that brings us back to the 7 words we started with. I'm over 65. What am I exempt from? Those 7 words may be worth more than almost any financial advice you'll receive this year. Now let's put everything together, take out a sheet of paper, or open the Notes app on your phone and make a simple list. Write down the name of your county, write down the name of your bank, your Medicare Part D plan, your utility company, the state where you file your income taxes, and every credit card that charges you an annual fee. That list represents the organizations most likely to be collecting money from you every single month, not illegally, but often unnecessarily. Now, contact each one. Not all at once if you don't have the time. One phone call today, another tomorrow. By the end of the week, you'll have answers that could change your retirement budget for years to come. Call your county assessor and ask about senior property tax exemptions. Call your SHIP counselor and ask whether you qualify for a Medicare savings program. Call your Medicare Part D plan and ask how close you are to your annual out-of-pocket prescription limit. Call your state tax department or your tax preparer and ask whether you're claiming every retirement income exclusion available in your state. Call your utility company and request a review of every senior or income-based discount they offer. Call your bank and ask for a senior account review. Then call your credit card company and ask whether they can reduce or eliminate your annual fee. Notice something? None of those conversations require a lawyer. None require hiring a financial advisor. None require complicated paperwork. Most require nothing more than picking up the phone and asking a question. And yet, millions of retirees never make those calls, not because they don't qualify, because they don't realize there's anything to ask. That's the part that bothers me the most. These aren't obscure government loopholes. They're not little-known tax strategies available only to wealthy investors. They're mainstream programs created specifically for older Americans, programs that legislatures approved, programs that banks, insurance companies, utility providers, and government agencies already know exist. The only missing piece is awareness. Think about what we've covered today. A property tax exemption that could save thousands of dollars every year. A Medicare savings program that may eliminate Part B premiums. A prescription drug cap that prevents unlimited out-of-pocket costs. State tax exclusions on retirement income. Utility discounts. Senior bank accounts. Credit card fee waivers. Free notary services. Individually, each one may seem modest. Together, they can make a remarkable difference. For many retirees, we're talking about thousands of dollars every single year. Money that could pay medical bills, cover rising grocery costs, help a grandchild through college, or simply make retirement a little less stressful. Unfortunately, these savings don't arrive automatically. No agency is assigned to review your finances and make sure you're receiving every benefit available. Banks aren't rewarded for reducing their own fee income. Utility companies aren't eager to lower your monthly bill. County tax offices don't routinely contact every homeowner who qualifies for an exemption. The system depends on something very simple. Most people remain silent. That's why those 7 words matter so much. I'm over 65. What am I exempt from? One question. 7 words. Potentially thousands of dollars. If today's report motivates you to make even one of those phone calls, then we've accomplished something worthwhile. And if you know someone who's over 65, a parent, a neighbor, a friend from church, or anyone living on a fixed income, please share this information with them. Sometimes one conversation changes far more than a monthly budget. Sometimes it gives someone the confidence to ask a question they've never thought to ask before. That's exactly why I created this channel. Every week, I break down complicated financial rules, government programs, and retirement issues into practical information you can actually use. Not to create fear, not to sell expensive products, simply to help you make better decisions with the money you've spent a lifetime earning. If you found today's report helpful, consider subscribing so you don't miss future updates. And before you leave, I'd like to hear from you. Which of these 7 calls are you going to make first? Let me know in the comments. Your experience may help another retiree discover a benefit they didn't know existed. I'm Daniel Carter. Thank you for watching. Take care of yourself, stay informed, and I'll see you in the next report. Disclaimer: this video is provided for educational and informational purposes only. It should not be considered financial, legal, or tax advice. Eligibility requirements for tax exemptions, Medicare programs, utility assistance, and banking products vary by state and financial institution. Always verify current rules with the appropriate government agency, financial institution, or a qualified professional before making financial decisions.